Hey there, thanks for watching. In this video, I'm going to share with you what I've learned about how to find information on your 401k retirement plan, how to change the way your funds are distributed, and how doing that can potentially help you make more money. So a disclaimer and some background information on me: I am in no way a financial professional. I'm actually the complete opposite. I graduated with a liberal arts degree, and I never thought that I would have a lot of money, and therefore I never thought that I would need to know how to manage a lot of money. I just really didn't pay attention. And as a result of not paying attention, I landed in a pile of credit card debt with no income. I was completely broke with a pile of debt. So I just woke up one day and decided I was sick of being in debt, and I was tired of being broke all the time. So I decided to get myself out of debt and to learn how to not be broke. So the purpose of my channel is to inspire other people out there who don't necessarily come from the strongest financial background to take charge of their financial futures and to learn the things they need to know, because that's what I'm doing right now. So if you would please give this video a like and a thumbs up if you are determined to build a better financial future for yourself as well. It is a huge help to me and this channel, and it doesn't cost you any money, so it's a way for you to show your support and to make your views count. Okay, so back to the 401k and why this is very important. So for background on my 401k, I have been with my current company for about 2.5 years, and the 401k plan that I have is with John Hancock. So I hadn't really looked at my 401k plan at all since starting, and when I first started this position, I was all like gung-ho, and I chose some elections. I chose what my company matches. It's 3%, so I definitely chose that, but I also wanted to contribute above and beyond, so I started off with 8%, and then I set the contributions to increase incrementally every year. Every year in January, I get an email from the plan administrators asking if I want to continue to increase my contribution amount, and I do. That amount is automatically increased in my contribution. To be honest, I don't even really notice that money coming away from my paycheck because it is pre-tax. So I figure the best way to save is to just automate it and not even see that money coming in. So this was really a set it and forget it approach to investing. I think I logged into my account maybe 2 times just to make sure that I could log in. I didn't really look at anything other than to make sure that I knew where the numbers were that said how much was in my account, and that is it. I didn't look at any other information. So what inspired me to take a closer look at what was actually going on with my account was the stock market recently and the huge ups and downs that we've seen. There's tremendous volatility, but also tremendous opportunity. And I wanted to know more about what was going on in my 401k account. So with that long intro, I'm going to show you what I've learned about my 401k and how to find the information that you need to make some decisions about how your account is allocated. And a lot of this will depend on how much time you have to work with. So if you're a little bit younger and you have a lot of time, you might want to be a little bit more aggressive in your fund choices, whereas if you are getting closer to a time when you can see yourself decreasing your working hours, then you might want to be a little bit more conservative. So I learned that by default, most 401ks are going to automatically invest you in what's called a target date fund. A target date fund is essentially a fund of funds, and they are managed to select assets that are appropriate for your investment return objective of that target retirement date. So, for example, a fund with a target retirement date of 2050 is going to be a bit more aggressive than a fund with a target retirement date of 2040. The idea being the closer your target retirement date, the less aggressive the fund will be. So by nature, these target date funds don't have the greatest returns because they are designed to be very, very conservative. They're designed to be hands-off with no real need for active management. So the advantage of a target date fund is that it is a very hands-off investment approach. You just literally set it and forget it. You don't have to look at it again for the next 20 years if that's when your retirement date is. 10, 15 years if it's a little bit sooner, and you can just kind of keep contributing money and allow it to accumulate with a very, very conservative investment approach. There are a couple common criticisms of target date funds. So one of the most common criticisms is that the returns aren't as strong as perhaps a simple index fund that just tracks the market. The reason for this is that a target date fund is designed to be more conservative in nature and not require as much hands-on management. Another criticism is that there tend to be more fees associated with the target date fund. This is because you're buying a fund of funds, and each fund has fees associated with it. So if you have multiple funds within a fund, then each of those funds has a fee, and those fees just kind of compound on each other. So with this information, I decided that I wanted to make some adjustments to the way that my account was allocated. So I'm going to be walking you through my 401k account, which is managed through John Hancock. So that's the example I'm going to be using. And I'm going to show you how I got the information to make the changes to my plan. This is what the login screen looks like for my 401k plan. You'll need your own username and password. And if you don't have them or if you've forgotten, you can just click that button that says forgot username or password. And here's the home page you see once you log in. At the top, you can see those drop-down menu options, and they are Manage, Review, Learn, or Quick Links. So the information I'm looking for is I want to find out my account's annual rate of return. That way I can compare it against the market and I can see how my account is doing compared to the overall market. So in order to find this information, I kind of had to go hunting around for it a little bit. So to find the information I'm looking for, I click on Review in the top menu, and then when that drop-down menu comes up, I click on Personalized Rate of Return. Then once I click on Calculate Rate of Return, I have these options here. So at the top, I see my rate of return, and I get to choose a time period. So what I'm looking for is to find out the year-to-date return for my account. So I'm going to select year-to-date at the bottom. So I'm going to select that year-to-date option, then I'm going to click on the Calculate button, and you'll see it'll throw me right up to the top of the page, but I'm going to scroll down. I'm going to see that the calculations have returned a rate of return for my account of 7.55%. So now that I know how my account is performing year-to-date, I can compare that performance against the year-to-date performance of some other benchmark funds, and I can determine whether or not I need to make some changes. So now that I see how my current fund mix is performing, I'd like to see what other funds are available to me within this plan administration. So to do that, I would go up to the top menu, I would select Review, and then in the drop-down, I would select the Investments option. And that would bring me here to the investment information page. There are a bunch of disclaimers up at the top, and down below we can see all the different funds that are available within this plan administration. So you can see they're divided into aggressive growth, growth, and growth in income. Also see the returns for 1 month, 3 month, year to date, and also the 1 year, 3 year, 5 year, and 10 year returns. Something I learned was how to judge a fund's performance using an apples-to-apples comparison. The column here represents a fund's performance since inception. And you would assume, because it's in bold, it's important and it's a benchmark that you should use for evaluating a fund's performance. This is something that I learned is not necessarily the case. Instead of looking at a fund's performance since inception, you want to look at a fund's performance based on a 1 year, 3 year, 5 year, and 10 year track record instead. This is because some of these funds have been around for 20 or 30 years or more, and while their beginning performance at their inception might have been really great, their current performance might be a different story. That's why you really want to look at that 1, 3, 5, and 10 year returns to make sure that you're getting a true apples-to-apples comparison. And as we scroll down, you can see additional funds that are available, along with the market indexes that we can use for comparison purposes. This way we can see how my account is performing against these benchmarks. So this is where I would do my research, look at those funds, and decide if I want to change the mix of funds that are in my portfolio currently. So this is how I would change the mix of funds that are in my account. Go up to that top menu, click on the Manage button, and then in the drop-down, I would select the Investments option. Then I land at this Make a Change page. I'll scroll down and I'll select Change how my future contributions will be invested. Then from here I land on a page that gives me tons of different options to change how I allocate funds into my account. So all of the funds that we just looked at on the previous screen are reflected here in the options. And you can see that I have the choice to allocate a certain percentage of each fund into my account. So as you can see, there really is a lot of potential to customize your account, and there's so many different ways to change and diversify the allocations within your specific account with all these different fund options. This is why it is so important for you to do your homework, do your research to determine which fund mix is best for you. So I hope this information has been helpful and has inspired you to take charge of your own financial future. As always, I thank you so much for watching, and I hope that you'll keep watching. Bye!